Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made.
Welcome back to the Equity Channel, the place to be for market insights.
You got it.
Today we're doing a deep dive into the latest economic data, really trying to see if we're on track for a soft landing or if there's some turbulence ahead.
Right.
So let's start with the Fed, shall we? They decided to trim interest rates a quarter of a point back on December 17th.
Yeah, December 17th.
On the surface, that sounds pretty good, right?
Sure, it does.
But then you look at what the Fed chair had to say, particularly about the job market.
Oh, yeah.
Things start to look a little more complicated.
Uh-huh.
The Fed chair basically said that the way jobs are being created right now, it's not enough to keep the unemployment rate steady.
Not enough, no.
And what does that tell us? That the labor market might be losing steam.
Could be, yeah. Fewer jobs means it's tougher for people to find work. And that can ripple through the whole economy.
Exactly. So trying to get that soft landing where we lower rates without crashing into a bear market or a recession
Right.
becomes a whole lot trickier.
Yeah. It's like steering a ship through rough waters. Gotta ride those waves without capsizing.
Now, to figure out where we're headed, we turn to the S&P Global Flash PMIs.
Ah, the PMIs.
And they're giving us some pretty mixed signals.
They are, aren't they? Services are booming, 38-month high, but manufacturing.oof, 55-month low.
Big difference there. The report even says, and I quote, growth remained heavily skewed toward the service sector, where an acceleration of growth contrasted with a steepening decline in manufacturing.
Right from the horse's mouth.
So while things might seem okay for now, businesses are definitely nervous about the future.
Yeah, and that hesitation can affect investments, hiring,
Right.
all the things that keep the economy stable.
Let's dig deeper into those employment trends.
Okay.
What did the PMI report tell us about jobs?
It showed some job growth, but employers were definitely cautious.
So, still hiring, but not like they used to.
Exactly. Trying to manage costs, having trouble finding the right people.
Hey.
It's a tough spot.
And I'm going to quote Chris Williamson here. He's the chief business economist. He said, it's a different picture in manufacturing, however, where output is falling sharply and at an increased rate, in part due to weak export demand.
Weak export demand. That's a big one.
Yeah. Explain why that's such a big deal.
Well, when other countries aren't buying as many of our products, we produce less here.
Right.
And that can lead to job losses, especially in industries that depend on exports.
Now, these PMIs, they're not just numbers.
No, not at all.
They're pretty powerful indicators of how the economy is really doing.
They are. They correlate strongly with GDP, even with S&P 500 earnings momentum. They're like a window into the future of the economy.
Okay, so besides PMIs, what else should we be looking at when we assess the job market?
Well, there's the Conference Board Employment Trends Index, the ETI. It actually went up in November to 109.55.
Went up. So what does that mean?
It could mean that the job market's getting stronger, which is interesting because it kind of goes against what the Fed chair said.
So is the job market stronger or weaker?
Yeah.
It's hard to tell.
Right. It's not always black and white.
Not always.
Mitchell Barnes, he's an economist at the Conference Board. He says the ETI went up because of good numbers in November on employment, turnover, and economic activity.
So there are some good signs, even with the Fed being so cautious.
There are, definitely.
Now let's talk about corporate profits, a pretty important part of the picture, wouldn't you say?
Oh, absolutely. It's the lifeblood of the economy.
But they've taken a hit, haven't they? Down 0.4% in Q3 of 2024.
Yeah, a bit of a dip. Last year we were seeing growth, but not this time around.
What's causing this profit slump?
It's a mix of things. Costs are up, supply chains are still messed up, and in some areas, consumers just aren't buying as much.
So we've got some positive signs like in services and maybe the job market, but the overall picture is still pretty murky, isn't it?
It is. There are pieces that fit and pieces that don't. It's like a puzzle where you're not sure if you have all the right pieces.
A very complicated puzzle.
Yeah, a real head scratcher.
It really is. So what are the big takeaways for our listeners today? What should they be watching for in the next few months?
Well, the job market's going to be front and center, that's for sure. Will those job numbers bounce back, or is the weakness that the Fed chair talked about going to stick around?
Yeah, definitely something to keep an eye on. Anything else on the radar?
Inflation. Will the Fed's moves actually work to bring it down, or are prices just going to keep climbing?
Because if inflation stays high, that eats away at what people can buy,
Yeah.
right? And that could slow down the whole economy.
Exactly. And we can't forget about what's happening globally. You've got all those geopolitical things, supply chains still acting up, and how other big economies are doing. All that can affect us here.
It's a reminder that it's all connected, right? The global economy, I mean.
Yeah.
Now, we've talked a lot about the data, but what does it all mean for investors? How do they use this to make decisions?
That's the million-dollar question, isn't it? It's not just about understanding the numbers, it's about knowing what to do with them.
So for investors listening, what's the game plan with all this uncertainty?
We've got to be careful, that's for sure. But there's still opportunities out there, too.
So a balanced approach, not getting too scared, but not getting too excited either.
Right. Diversification's always key, right? Don't put all your eggs in one basket.
Spread it around a little bit.
Spread it around. Different assets, different sectors, different parts of the world. It's just good practice no matter what the economy's doing.
Always a good idea. What else should investors be thinking about in this kind of environment?
Earnings, valuations. You got to look for companies that are solid, have a good track record, and aren't overpriced.
So not just chasing the hot stocks, but finding real value.
Exactly. And don't forget, investing is a marathon, not a sprint. Keep your eyes on the long-term goals. Don't let the ups and downs freak you out, and don't let fear or greed make your decisions for you.
Great advice. We've covered a lot today. Any final thoughts for our listeners?
Just this. Stay informed, stay engaged, and remember that when it comes to the markets, knowledge is your best friend.
Well said. And with that, we'd like to thank our listeners for joining us on this deep dive into the economic data.
Thanks for tuning in to the Equity Channel. We hope this has been helpful for you.
Yeah, it's a lot to take in.
It is.
But hey, that's what we're here for, right? To break it down and make sense of it all.
Absolutely.
Thanks for hanging out with us here on the Equity Channel, getting into the nitty-gritty of the economic data.
Yeah, thanks for listening.
Hopefully you've learned a thing or two that'll help you on your investing journey.
Definitely. Always good to be informed.
And remember, here at the Equity Channel, every time we drop a new episode, money is made.
That's right.
So hit that subscribe button, turn on those notifications, and you'll be the first to know when we're back with another deep dive into the world of finance.
Looking forward to it.
Until then, stay informed, stay invested, and we'll catch you next time on the Equity Channel.